Welcome back to TalkTickers. Spooky season is upon us, and you know what that means. Earnings season is in full swing. This time, we're gearing up for, well, a real monster of company, Amazon. Their Q3 earnings call drops on October 31st, and we're here to make sure you're ready to dissect every spooky detail.
Yeah, we're not just going to throw numbers at you, though. This is an earnings preview deep dive, so we'll be unpacking what's been happening with Amazon recently, what analysts are expecting, and most importantly, the key metrics to watch for on that call. Think of this as your cheat sheet to understanding what really matters, even if you don't have time to, pore over every press release and financial report.
Perfect. So to get started, anyone who follows Amazon knows their stock has been on a bit of a roller coaster ride this year. It hit that 52-week high of $201.20 back in July, but then took a bit of a tumble after Q2.
Exactly. That dipped to $161.02 on August 5th. That was after a revenue miss. And their guidance for Q3 was a bit cautious. But it's worth noting that the stock has been steadily climbing back up since then, and it's currently sitting about 6% below that 52-week high. So there's definitely potential for growth here, but is it a trick or a treat? That's what we're here to figure out.
Okay, so before we get into the specifics of Q3, let's talk about Amazon's recent performance.
Yeah.
They've historically been known for exceeding expectations, right?
Absolutely. They've consistently beaten earnings estimates over the past 4 quarters, and not just by a little bit. We're talking beats ranging from 18% all the way up to a whopping 59%. So they've set a pretty high bar for themselves.
Wow. All right, so with that in mind, what are analysts expecting for this quarter?
Well, the consensus estimate is for earnings per share, or EPS, to increase by 21.3% to $1.14. That's pretty significant. Revenue is projected to grow by 9.9% to $157.2 billion. Now, that might seem like a healthy growth rate, but here's where things get interesting.
Here's where we get our magnifying glass out. I like it.
Exactly. Amazon's own guidance for Q3 revenue is a bit lower, falling between $154 billion and $158.5 billion.
So their own guidance is actually below what analysts are predicting. That doesn't sound like the Amazon we're used to. No wonder investors got a little spooked when that guidance came out.
That's right. The midpoint of their guidance falls short of the consensus estimate, but there's one factor that could really shake things up.
Ooh, a wild card. Tell me more.
It's their Prime Big Deal Days event. Remember that massive shopping event they had in October? Well, Amazon declared it their biggest October shopping event ever. That suggests strong sales, which could potentially boost their Q3 results beyond those initial projections.
Right. Plus, let's not forget, the holiday shopping season is just around the corner, and that's always a huge driver for Amazon.
Exactly. So while that initial guidance might have seemed a bit low, there are definitely factors that could push those numbers higher. But to really understand what's going on, we need to go beyond the top-line figures and dive into those key metrics that can give us a much deeper insight into Amazon's performance.
Okay, let's unpack those key metrics. What should we be paying extra close attention to during this earnings call?
Well, one metric that's always important, especially for a company like Amazon, is operating margin. Historically, Amazon has been laser-focused on growth, even if it meant sacrificing some profit along the way. But things are starting to shift under Andy Jassy's leadership.
Right. They finally hit double-digit operating margins for the first time in Q1 of this year, reaching 10.7%. That was a big deal. But in Q2, the operating margin slipped back down to 9.9%.
Exactly. So what we need to watch for is whether this is just a temporary blip or a sign of a broader trend. Their Q3 guidance predicts operating margins between 7.3% and 9.5%.
Okay, so it sounds like we need to be looking for clues about whether Amazon can continue to expand those margins or if those cost-cutting measures are starting to lose their effectiveness.
Right. Now, another key area to focus on is advertising revenue. This has been a consistent growth engine for Amazon, and it's been on fire lately.
Yeah, I've been hearing a lot about that. Their ad business seems to be booming.
It is. Over the past 6 quarters, their ad revenue has grown by over 20% year over year. In Q1 and Q2 of this year, it hit $11.8 billion and $12.8 billion, respectively. So this is definitely a segment we want to keep a close eye on. A lot of this growth can be attributed to a general resurgence in digital advertising. As the economy has stabilized, companies are investing more in their online ad campaigns.
And Amazon is perfectly positioned to capitalize on that, right?
Yeah.
I mean, they have this massive platform with a ton of customer data, and they're able to target ads very effectively.
Exactly. They also benefit from having a very engaged audience. Prime members are more likely to click on ads and make purchases, which makes Amazon a very attractive platform for advertisers.
Plus, they've been expanding their ad offerings, particularly on Prime Video. I've definitely noticed an uptick in ads while I'm streaming my favorite shows.
Yeah, they're becoming a real contender in the streaming advertising space. They're going head to head with giants like Meta and Alphabet, and it's creating a really interesting dynamic, especially with events like the Paris Olympics and the US elections driving up ad spending even further.
Makes you wonder how Amazon's share of that market will evolve, especially with their plans to expand Prime Video ads to more countries in 2025.
It's definitely a key area to watch. Now, speaking of key areas, we can't talk about Amazon without talking about their crown jewel AWS Amazon Web Services.
Ah, yes, the cloud computing behemoth. Even with the competition from Microsoft Azure and Google Cloud, AWS just seems unstoppable.
It really does. Their current annualized revenue run rate is over $105 billion. And get this, their growth is actually accelerating. In Q2 of this year, AWS revenue grew by 18.8% year over year. That's up from 17.2% in Q1 and even higher than the 13% growth they saw in the last quarter of 2023.
So it's not just that they're big, they're getting bigger faster. That's pretty impressive. What's fueling that kind of growth?
Well, the shift to cloud storage is a major factor. Businesses of all sizes are realizing the advantages of migrating their data and applications to the cloud. It's more cost-effective, scalable, and often more secure than traditional on-premise infrastructure.
Right. It's like renting an apartment versus owning a house. You don't have to worry about all the maintenance and upkeep. You just pay for what you use.
Exactly. And on top of that, you have this explosion of interest in generative AI. These AI models require massive amounts of computing power for training and deployment, and the cloud is the perfect environment for that.
So AWS is benefiting from this double whammy of digital transformation and the AI revolution. It's no wonder they have such a huge backlog of orders.
That's right. At the end of Q2, the AWS backlog stood at a staggering $156.6 billion. That's a strong indicator of sustained demand, even with the competition heating up.
So AWS is a major growth driver for Amazon. But they've also got this other big bet in the works, Project Kuiper. Can you remind us what that's all about?
Project Kuiper is Amazon's ambitious satellite internet venture. It aims to provide high-speed internet to underserved areas around the globe. The plan is to launch over 3,236 satellites into low Earth orbit, creating a global broadband network.
It sounds like something straight out of a sci-fi movie. But this isn't just some futuristic dream. They're actually making it happen.
They are. And the FCC has given them a pretty tight deadline. Amazon needs to deploy at least half of those satellites by mid-2026.
Wow, that's not a lot of time. And I've heard those satellites are pretty expensive to build and launch.
They are. Industry analysts estimate that the total cost of Project Kuiper could end up somewhere between $16.5 billion and $20 billion. That's a lot higher than Amazon's initial estimate of $10 billion.
So this is a major investment for Amazon, and I'm sure investors will be eager to hear any updates on the project's progress. Do we have any indication of when those costs might start to translate into revenue?
Well, analysts predict that Kuiper could actually lead to losses of up to $1 billion in Q4 of this year, potentially rising to $5 billion to $6 billion next year. It seems they are anticipating some significant upfront costs before any meaningful revenue starts flowing in.
Okay, so it sounds like this is a long-term play for Amazon, and investors will need to be patient, but the potential payoff could be huge.
Right. It could be. Remember that figure of $36 billion in annual revenue if they can snag 100 million subscribers. That's the kind of scale Amazon is aiming for. But of course, they're not the only player in the satellite internet space. SpaceX's Starlink is already a major competitor with over 6,000 satellites in orbit.
So it'll be interesting to see how Amazon differentiates Kuiper and gains market share. Do they have any aces up their sleeve?
Well, one key advantage is their integration with AWS. They can offer seamless connectivity between Kuiper and their cloud services, which could be a major selling point for businesses and organizations.
Plus, I've read that they're targeting specific niche markets, like providing internet access to airplanes, ships, and other mobile platforms.
That's right. And they're not going it alone. They've secured partnerships with major telecom providers like Verizon, Vodafone, and NTT, which could help them expand their reach quickly.
So it sounds like they're taking a multi-pronged approach, leveraging their existing strengths in cloud computing and logistics, targeting specific markets, and building strategic partnerships. It'll be fascinating to see how this all plays out.
It will be. And it's worth noting that Project Kuiper is more than just about connecting people to the internet. There's also talk of it being used for national security and defense purposes.
Right. I've heard speculation about Kuiper being used as an alternative to GPS and providing positioning, navigation, and timing services, or PNT, for both military and commercial applications.
Exactly. So it's not just about streaming Netflix in the middle of the ocean. It's about creating a robust and resilient infrastructure that can support critical functions in a variety of sectors.
Okay, so we've got AWS dominating the cloud project Kuiper, aiming for the stars, and this massive e-commerce platform that's constantly evolving. It's almost like you're building this sprawling tech empire.
It's quite impressive. And what's fascinating is how all of these seemingly disparate businesses are interconnected. They feed off of each other, creating a powerful ecosystem that's constantly evolving.
I see what you mean. For instance, those AI chips they're developing could be used to improve everything from product recommendations on their e-commerce platform to optimizing data centers for AWS to enhancing the performance of Kuiper satellites.
Exactly. It's all part of this flywheel effect that Jeff Bezos envisioned, where each business unit reinforces the others, driving continuous innovation and growth. And Andy Jassy seems to be continuing that vision, albeit with a bit more focus on profitability and cost control.
So it's this constant cycle of innovation and expansion pushing the boundaries of what's possible.
Yeah.
But the question is, can they maintain this momentum? Can they keep growing at this incredible pace while also navigating all the challenges and competition they're facing?
That's the big question. And this earnings report will give us some valuable clues. We'll be watching those operating margins closely, looking for signs of continued improvement. We'll be looking at those advertising revenues to see if they can keep growing at that impressive rate.
And what about AWS? Can they sustain that double-digit growth rate? And will we get any updates on the progress of Project Kuiper?
These are all key questions that we'll be looking to answer as we dissect the earnings report and listen to Amazon's commentary on the call.
It's going to be a fascinating event, that's for sure. You know, before we move on, I want to circle back to something we touched on earlier. The competition Amazon is facing from those Chinese shopping apps like Temu and Shein.
Yeah.
It's such a fascinating case study in how globalization and technology are disrupting traditional retail models.
It is. And it raises some important questions about fair trade practices and the role of government regulation in the global economy.
Right. You have these Chinese companies offering incredibly low prices, which is great for consumers. But then you have these concerns about potential labor exploitation and unfair competition for American businesses. It's a tough situation.
And then there's the environmental impact to consider. Think of all those cheap goods being shipped across the ocean. It's not exactly sustainable.
It's a complex issue with no easy answers.
It really is. And it'll be interesting to see how this whole de minimis situation plays out. Will the U.S. government implement stricter regulations?
And if they do, how will that affect Amazon's own retail business, especially as they reportedly consider utilizing that same rule for their own direct-to-consumer operations?
It's a delicate balancing act. They want to remain competitive on price, but they also need to be mindful of the ethical and environmental implications.
It's a reminder that even the most successful companies can't operate in a vacuum. They're part of a larger ecosystem, and their decisions have far-reaching consequences. So as we wrap up this earnings preview, we're not just leaving you with data points and analyst projections. We're hoping to spark a deeper conversation about the forces shaping our economy, our technology, and ultimately our future.
Because that's what it's all about, right? Understanding the bigger picture.
Yeah, it is about the bigger picture.
Yeah.
And these conversations are only going to become more critical as technology continues to advance at this crazy pace. AI automation. Everything's getting more connected. We're on the verge of some seriously transformative changes.
It really is both exciting and a little bit daunting. The possibilities feel almost endless, but so do the potential challenges.
Totally. We can't just sit back and passively consume the newest gadgets or services. We need to understand how this stuff is shaping our world.
Yeah.
Make conscious choices about how we interact with it all.
Well said. That's precisely why we do these deep dives. To equip our listeners with the knowledge and insights to navigate this crazy, complex landscape and make those informed decisions.
So when you're listening to Amazon's earnings call next week, don't get lost in just the numbers. Think about the big picture. Think about how these trends in e-commerce, cloud computing AI, even space exploration are going to reshape our world in the years ahead.
And how can we as individuals, as a society, make sure we're harnessing the power of these technologies for good while being aware of the potential risks?
Big questions we need to be asking ourselves.
Yeah.
And we hope this deep dive has given you something to think about.
We'll be back after the earnings call with a complete breakdown of the results and our analysis of what it all means. Until then, keep exploring, keep learning, and keep those tough questions coming.
Thanks for joining us on TalkTickers.